So there has been absolute chaos here in the crypto market for the last 12 hours as basically everyone is freaking out about what's happening over in Japan, saying that this could be the very black swan that not only brings down crypto and the stock market, but global equities as well. Now, as a result of this frenzy from the last 12 hours, I wanted to make a quick video for you all, just objectively going over what exactly is happening over in Japan and why it could be important for crypto without all the craziness, without all the emotions. So if you're cool with that, let's go ahead and let's jump into it. And let's first and foremost break down just in general what is happening, and then we'll talk about crypto and how it's related to crypto in a couple minutes. So everyone's freaking out right now because the 20-year and 10-year government bond yield in Japan is going up, and it's going up very, very fast to levels it's not been to in decades. Okay. Now, if you don't understand what this means, let me kind of unwind this a little bit more. So in Japan, there are things called bonds. Now, bonds exist all over the world, but let's isolate Japan because this is where it's happening. But in Japan, again, there are things called government bonds. And a government bond is quite simply when a person, an entity, a company, corporation, whatever it may be, loans the Japanese government money, and the Japanese government pays them back interest. So the Japanese government could maybe say, hey, anyone who loans us money will give you 5% per year for 10 years, just a random example. And then, of course, what naturally will happen is people will say, okay, here's $1,000 Japanese government. And the Japanese government's like, great, here's $50 every year for the next 10 years. And at the end of that 10 years, or prematurely if you want to cancel out, then you can, of course, take your money back. So you can get your money back at the end of the term or before it with a bit of a penalty. And then obviously you've been able to collect your interest. So a lot of people look at this as a safe bet because they can just loan a safe entity, being the government money, and collect money for their money, then just get their money back, right? And so this is something that, of course, is a massive, massive part of their entire ecosystem and massive part of their economy, just like it is here in the United States and other major companies or countries in the world. So that's how a bond works, and that's what a bond is. Now, the bond yield is simply just that percentage that the government offers for that loan. So you remember how I told you the Japanese government could say, hey, we'll give you 5% if you loan us money? That 5% is the bond yield. It's what your bond yields. And the yield over in Japan right now is going up very fast. I mean, extremely fast, meaning that people who loan the Japanese government money will be able to make a lot more money back from their loans. Now, you may think, well, Tyler, that sounds like a good thing. Like, people get to make more money. It's safe. It's free. Everyone's happy. Not so fast. Because what you need to understand is that yields, especially on government bonds, only really rapidly rise when massive entities and companies are expecting that interest rates are going to be hiked, that interest rates are going to go up. Because what impacts the government bond yield is interest rates. When interest rates are low, government bond yields are typically lower. When interest rates are higher, the government will naturally have to offer a higher yield to match that rise in interest rates. And so what's happening right now is that, sure, people can make more money from their bonds, but the actual interest rates in the country are going up. And what does that do? It makes it harder to access money. It makes money more, less liquid. There's less capital flowing through the system. And in general, it's not a great thing. And so right now, sure, yes, it feels good that people will make more in their bonds, but that's only really to compensate for the fact that something somewhat negative is happening, which is interest rates climbing. Okay. Now, it doesn't just end there, though, okay? And this is where things start to get a little bit weird, okay? This is when things get a little uncomfortable. Because you may be thinking, well, I mean, who cares, right? The U.S. raises interest rates all the time. Major countries raise and cut interest rates all the time. I mean, who cares? It's just volatility. Yeah, not Japan. So Japan has had very low, if not negative interest rates for about 26 years straight now. They've never really had to raise interest rates a ton, even in the 2000s, okay? And the reason why they've had them so low for so long is because they went through some terrible times financially in the 90s, especially in the early 90s. And in 1999, they made the decision like, hey, we're gonna have to cut interest rates down extremely low in order to inject some liquidity back into our ecosystem, into our economy, and help grow things, right? We need more capital, we need more liquidity, more investment. And so they went in and they dropped interest rates down like crazy, at one point being a negative, which is wild. But anyway, so for the last 26 years, again, since 1999, interest rates in Japan have been incredibly low. They've never really consistently raised them at all. And so it's been a place where you could go to get cheap money. Now, speaking of cheap money, what we've seen for the last 26 years is as a result of that cheap money that's over in Japan, people have been doing what's called carry trading, which is when governments and major entities will go to Japan, they'll borrow money in the Japanese yen, and then they'll get a very low, if not negative interest rate on that loan, then take that money and go invest it in global equities, stocks, crypto, and other places to try to generate a yield. So major countries have been taking, and companies as well, have been taking advantage of the fact that you can get cheap money in Japan. It's called a carry trade. The problem is, though, If Japan does start raising interest rates, which is what triggered bond yields to go up, it means that that cheap money that everyone's been getting out of Japan can be not so cheap anymore. And all of those loans that major companies and entities and corporations, the loans that they've taken from Japan, they could get much more expensive because these massive loans, they're not fixed rates. They're floating rates or variable rates, meaning that if Japan raises that interest rate, the amount that these companies or countries have to pay in order to keep that loan goes up. And so naturally, many of them be like, screw this. I mean, I'm not paying that interest rate, right? It was free money before. If it's not free money, I don't want it. And so what they'll do is they'll sell that asset that they pre that loan in Japan. Let me make this more simple. Someone looks at Japan 10 years ago and says, okay, I can get cheap money or free money in Japan. Goes to Japan, gets a loan, gets some free money. Come back to the United States, maybe they have a big mining company or whatever, and they buy a whole bunch of Bitcoin. Okay, they buy a ton of Bitcoin off that loan. And then they use some of the yield that they can generate from Bitcoin to pay off that loan, if there even is an interest rate that they need to pay on the loan over in Japan. And then let's say in 2025, Japan raises those interest rates up like crazy, and now that loan that they went take 10 years ago gets very expensive. They very well might say, I ain't paying this loan for Japan, no way. So they go and they sell that Bitcoin that they previously bought, they pay off that loan, and they just move on and say, you know what, the last 10 years have been great. I made a whole bunch of money. This is called the unwinding of the carry trade. The carry trade was them borrowing money in Japan and coming back and investing it globally. But the unwinding of it means the selling of the asset that they purchased in order to, of course, pay off that loan. And so right now, it's not really the fact that yields are climbing at all. No one really cares about that. What we care about is the fact that Japan is raising their interest rates, which is, of course, going to cause an unwinding of these carry trades that can affect global equities, stocks, cryptos, and much more. Now, you may be thinking, well, how bad can it be? Well, I'm going to lie, it could be a little bit problematic. Matter of fact, if we actually do go look, I saw a really good article just a few minutes ago. Where was this at? I think it was on this one. We'll take it. So here you go. So Japanese institutions hold approximately $1.1 trillion in U.S. Treasury securities, the largest foreign position. When domestic yields rise from nothing to nearly 2%, the math changes. So there is a lot of money in these carry trades. There's a lot of money that has moved as a result of this free money over in Japan. And if we do truly see interest rates really climbing and a massive unwinding of these carry trades, it truly can be a bit problematic, not only for crypto, but this could be a bit problematic for global equities and assets as well. So is this going to be the end of the world? No. But could it naturally cause some fluctuation, some volatility, some sell-offs across all asset classes? Absolutely. And I do personally think that although it won't last very long, it could be somewhat violent in the short term. Now, I'm not personally too concerned about this. Many of these narratives that pop off like this don't actually end up leading to anything. All they usually do is just freak people out, but it is worth paying attention to. And I will say that if we do start to see a mass unwinding, yeah, the next 6 to 8 months could get really ugly for very isolated asset classes that have a ton of exposure to the Japanese carry trades, okay? So I'll make more videos in the future talking about which asset classes you really need to be locked in on in this, because there will be opportunities that popped up there. But I do believe crypto will be somewhat impacted from this, but not like crazy, terribly impacted that's going to ruin the entire crypto market. I don't think that's the case. I think people are freaking out for no reason because people just like to freak out for views, okay? But this is somewhat impactful and it is worth paying attention to, okay? And so if I'm going to break it down at its core to make it very simple, understand this. People have been getting free money in Japan. Now we're seeing interest rates possibly going up, which is causing bond yields to go up, which is freaking everybody out because they think that all of the free money loans that people have been taking, they're going to cancel out on and go sell the assets that they bought with those loans, which could be crypto, could be stocks, global equities, and much more, okay? So that's what's going on. That's what everybody's freaking out about. And again, I'll keep you updated as this all plays out. But the best thing you can do right now is nothing. I mean, there's nothing you can do about it. If there is going to be a global unwind, there's just going to be a global unwind. But what I will say is that this is not some sort of like 10-year, 20-year, 30-year problem. I do believe this is in like within a 1-year problem. Yeah, things could get ugly, things could crash, things could go down. That is absolutely true. But I believe that would just be an opportunity. And these sorts of unwinds are typically just resets in which liquidity and opportunity shift in different directions and they go to different places. And all we have to do is be able to recognize where those places of opportunity are, capitalize on them, invest into them, and then, of course, ride that wave back upward. So it's not the end of the world. It's not the apocalypse. It's nothing like that. There could just be buying opportunities presenting themselves soon if this does spiral out of control. And I'll keep you updated on if it does spiral out of control. So hopefully this breakdown and explanation was easy to understand. I don't really know if it was or not. So let me know down in the comments below, and I'll keep you updated as all this crazy shit plays out. And I almost forgot, we got to, of course, get a little bit of... It won't turn off. There we go. Bye, guys.